Hey guys, welcome everyone once again to a new live stream with Binomo Live. The topic of today is market wisdom, why the market is always right. I hope you can hear me well and can see me in the video. If not, let me know in the comments, in the chat, and we'll do something to fix it. So let's talk about this, why the market is always right. And some of you might say, why do traders always lose? It's more or less the same thing, but we have to understand and accept certain things about the market to be able to make profits from the trends that we are seeing. So a lot of traders are saying, I just lost a lot of money. We are seeing here BMR trading, big loss. Hey man, I feel you. I've been there, and let me tell you that it's not going to be permanent if you try to fix yourself and always find ways to improve. So the thing about the market always being right is basically understanding that there are factors influencing asset prices. There are factors influencing currency prices, crypto prices, and index prices in the market. When the market is moving in specific direction, it is based on everybody, all the participants in the market agreeing on the news, agreeing on the direction, and we just have to make sure that we are reading that in the same perspective and understanding what the market agrees and wants to do. Now, this is also in if I shorten it and summarize it for you, it is basically saying do not fight the trend. It is one of the easiest way to make money if you understand what do not fight the trend means. Okay, never fight the trend. If the market wants to go down, it is almost impossible for you to make money by making an up trade. If the market wants to go up, it is almost impossible for you to make money by making a down trade. So really assessing what the current situation is accepting that the market is right and not fighting against it. Okay, there is a supply and demand. There are always sellers and buyers. Even when the market is moving and pushing asset prices up, you see on the screen right now, I have AUD USD on my screen, on my platform, and it is currently moving up. The last couple of days, AUD USD has been going down because there was some not so good economic news coming from China, and that is affecting the Aussie dollar. And we got some strong economic numbers, high inflation from the US, that's making the US dollar stronger relative to the Aussie. Now, today, that trend has changed, but that change might not be permanent. You see, whenever we see that the asset is changing direction, it doesn't particularly mean that the asset is going to forever run with a new trend. We have to assess and see whether this current change is temporary or slightly longer lasting. Whatever it is, to be able to profit from it, we have to accept that the downtrend that we saw the last couple of days has changed. Maybe those traders who made a lot of profit the last couple of days are now closing their positions by, when they open a down trade, that's basically selling the positions, selling the assets. And when they close their sell positions, they have to buy. And this is probably why you are seeing the asset currently moving up, because of all the buy trades to close the positions that they took earlier in the week. So the asset is moving up. Now, we can continue to believe that the fundamentals are saying AUD USD will go down, but when the asset doesn't show a downward movement, we have to be prepared for the pullback, and the pullback might be short term, might be longer term, but don't ignore the fact that the direction has changed, at least for today's session. Okay, so accepting the reality of what is going on today is a key part of understanding why the market is always right. Okay, there are sellers and buyers, but the direction is the overall decision that is affecting the asset. So we got to be aware of that. If we don't accept that the market is right, if we don't accept that the direction the market is going for any assets we are looking at, then we are going to be influenced by our own thinking and our own emotions. Now, you have to separate which one. If you don't agree with the market because you think the asset should go down, that could be emotional decision making, or that could be an emotional response. You might have suffered some losses when the asset changed direction, so therefore you still want the asset to go down. So you are basically a bit emotional about why the asset is not moving down, giving one example. And but sometimes you don't agree with the market and you think the asset will still go down, not based on how you feel, but based on your analysis of a higher time frame chart. So maybe you are looking at a 1 day time frame chart, maybe you are looking at a 4 hour time frame chart, and based on that analysis you disagree with the market and are prepared for the asset to complete the pullback moving up, and then wait for it to continue move down, and then take your position based on the continuation of the downtrend. So if that is the case, you disagree with the market but you don't make any trades because you are waiting for certain signals, you are waiting for the right moment to come back in, or you are waiting for confirmation for the trend that you have analyzed based on your trading strategy, then that is better than the first situation. Because the first situation is based on disagreeing with the market, thinking that you are right and the market is actually wrong, but you are guided by emotion. If you are guided by the second situation where it is based on analysis, you disagree with the market because you have done some analysis, you know that short-term time frame is showing an upward trend, but the longer term time frame is showing a downward trend that is not yet cancelled or that is not yet invalidated. So then you can take that position and you can wait for to open your trades after getting confirmation, after getting proof that your analysis is correct. Then that is far better than fighting the market using your emotions. And the thing about making trades when you are on the side of the market, so if you are looking at the market and it is going down and you agree with that situation, you don't trade blindly and say whatever you do, as long as you agree with the market, you are going to make profits like crazy. It doesn't, you cannot throw out discipline, you cannot throw out good trading practices even if you are on the right side of the market, even if you agree that the market is right and moving in the direction that that you, both the market and you, agree that the asset is going down. So if you both agree, it doesn't mean that you can throw away good trading practices. Now, what do I mean by good trading practices? Even when you have signals, confirmed signals that the asset is moving in the direction, specific direction that you have anticipated based on your analysis, you still have to focus on risk management. You have to make sure that the trades that you open are not too huge. You're not taking too much risk, because too much risk will immediately destroy you when something unexpected happens. And something unexpected usually happens when you make big trades. So keep your trade size following your trading strategy, or if you don't have a specific trading strategy, at least protect yourself, protect your account balance by keeping your trade size small and manageable. This way, even if you were to lose money, it will not be a huge negative impact to your trading balance and total portfolio. So that's really important. Having a portfolio, having a trading balance that you can continue to trade even when you have some losses is really key. You don't want to go into the market on Monday and be out of capital, be out of money by Tuesday. You want to be able to trade Monday, Tuesday, Wednesday, Thursday, and Friday, and then the following week. with whatever capital you have. So make small trades so that you are able to continue to trade even if you have some losses. Now, you're not going to have all trades turning into losses. That's just the fear if you don't have trading strategy or if you haven't tested a trading strategy. So again, even when you agree with the market, it doesn't mean you throw away good trading practices. Focusing on risk management is one. And second, you also need to be flexible. You need to be open. The markets can change direction anytime. If you look at any asset on the platform, any asset, okay, I have AUD USD right here. You see, the asset can go up and down any point in time. I'm now on the 15 minutes time frame. It can go up and down any point in time. Okay, one moment it's down, the other moment it's up. Now, if I go to Euro USD, you would see basically the same thing. This is the nature of markets. Okay, it goes up and it goes down, and you have to be flexible. Even when you have made analysis based on your trading strategy and you find confirmation that the asset is going to go down, and then you open your trades, you have to be flexible that the situation can change at any moment, so be ready for it. So don't open, it's one thing to open one small trade so that you protect your capital. It is also important that you don't open multiple small trades, because that is a sign of overconfidence. So overconfidence is just as bad as making one big trade, and that's going to destroy your portfolio. So even if you're really confident and you're getting all the signals confirmed that the asset is going to go down or the asset is going to go up, and the market agrees with you, it flows in the direction and you are in profit in some of your trades, don't be too overconfident and continue to be flexible. Now, the reason I say flexible is because sometimes, okay, not sometimes, at any point in time and on any trading day, doesn't matter if you have news or if you have any events, sometimes the market can change direction with no news whatsoever. You don't have any geopolitical events, you don't have war, or you don't have announcements or speeches or interest rate decisions by anybody, but the market can still change direction. So you got to be flexible and be prepared for it. It does happen. And it happens to all assets. So be flexible. So when you set your time frame, the trade duration of your trades, if you think the market is going to go down, the market has shown that it's going to go down, all your signals are confirmed, don't open a trade that's too overconfident. Don't put a 24-hour trade. Don't put a 6-hour trade. If you're analyzing on the 15 minutes time frame, use something reasonable. Use 3 or 4 candlesticks to make profit from the direction. So if the direction is down, open 3 or 4 candlesticks of 15 minutes. So that's going to be, if you're using 3 candlesticks of 15 minutes, the trade duration is going to be 45 minutes. If you open a trade based on 4 15-minute candlesticks, then that means your trade duration is going to be 1 hour. That's enough. If you open a trade because you think it's going to go down no matter what happens, then you are not being flexible and you think you are right all the time. You are not right all the time. So is the market. The market is not right all the time. Sometimes the market moves up and then the news comes out and then the market pushes the asset down. So the market is always right at any given point in time, but it will change direction with or without evidence, with or without news. You, as a trader who's trying to make money from the direction, have to be open and flexible, always ready for it. So if you open your trade, don't open a trade that's too long in duration. Keep it reasonable. So if you're using 15 minutes time frames, 3 or 4 candles, that should be enough. If you're looking at the asset using 5 minutes time frame, then again you can open 3 or 4 or 5 candles. So each candle is 5 minutes. So don't mess that up. When you change your time frame, the trade duration will also change. So if you're using 3 candles on the 15-minute time frame, that's a 45-minute trade duration, up or down. If you open a trade on the 5-minute chart, 5-minute time frame, 4 candles means not 1 hour. 4 candles on the 5-minute means it's 20 minutes. So be aware of that. Next, embrace continuous learning. So even if you are right, you agree that the market is right, and you are getting wins. You're getting wins from your trades, and you are enjoying your trading days, and you see that your account balance is growing. It is always a good idea to spend some time learning new skills. Read about stuff that you already know. Read about the indicators that you always use: moving average, RSI, Fibonacci levels, support and resistance, demand zones and supply zones. Continue to read, continue to develop, see other people's perspectives, because having all this information when you don't need it is going to become useful when the market changes and your trading plan suddenly becomes not so profitable. Our trading plan that we create for ourselves, even though we accept that the market is always right and you're going to adjust your trading plan to follow the market's direction, that's fine. But you have to be ready to adapt or improve your trading plan, your trading strategy. All traders will tell you that no trading strategy in this world will work 100% all the time from January to December. Sometimes you got to change. Sometimes you got to be make some tweaks and adjustments, small adjustments, so that it could handle unpredictable situations in the market. And the unpredictable situations, it could be anything. Right now we have Israel and Iran, the conflict, tension in the Middle East between Israel and Iran and the US and Palestine. These things are affecting some assets. Gold is affected, oil as a commodity is affected, and asset prices are also affected. AUD USD is also affected. When traders want to take safer trade, they will prefer to trade and hold US dollar. So AUD USD is affected. So if you see an escalation in terms of the Middle East conflict, you might want to have a look at AUD USD, see where it's going. Chances are AUD would weaken, AUD USD will weaken. So that is something that you probably need to take into account, because it's not happening every day. Things that are not happening every day, you have to be prepared for it. And the way to understand it is to read up from other traders, read up about indicators, read about other traders' experience when they share their winners and their losers on social media, on forums, or on blogs and websites. Okay, and besides focusing on risk management, staying flexible, and continuously learn to be ready for any situation, it is something that you cannot avoid, and that is losses. There is this thing that, no matter how good the strategy is, sometimes we are going to incur some losses. It is always a good time to spend weekends or at the end of the trading session every day. If you make a lot of trades, analyze your trades. Analyze the good trades, analyze the bad trades. What went wrong with the bad trades? Was there any emotion affecting your decision, affecting your trades? The number of trades, the size of your trades. Was there something wrong with your analysis? Did you follow your strategy completely, or did you change it to suit the direction of the market, or to suit the context of the economic or geopolitical situation for the day? And what assumptions did you make? Did you make any assumptions before making trades? Whether it's for winning trades and for losing trades, write these things down. It will tell you whether you are making the correct analysis. It will tell you whether you are using the right information to make trades and to come out with either profits or losses. Analyzing and self-reflecting is so powerful. It makes you a trader who is aware of your strengths and weaknesses, and nothing could make you a better trader than you knowing where your strengths are and where your weaknesses are. Sometimes, for example, every time war breaks out, a lot of traders just jump into commodity, just jump into gold, because those are typical normal assets that will go up and pushed up really high. But for some people, they consistently lose money in these situations. So really analyze what went wrong. You might be able to find the answers that you need. Maybe you reacted too soon when the news comes out. maybe you reacted by taking too much risk. You open one position, you open one trade, and then as the asset moved in the direction that you predicted, and then you open two or three more trades because of confidence and because you think the market is going to stay in that direction for some time, and then the pullback happens, and maybe that's how you lose money. So analyzing your trades, knowing when mistakes happen, and what information or analysis that you made that contributed to those losses could help you. So never lose sight that you can always become a better trader by looking at what you're doing and seeing room for improvement, finding ways to improve. And yeah, that's what I have for you today. Let me know if you have any questions or comments in the chat. So today's situation is pretty interesting. The Federal Reserve yesterday, Jerome Powell saying that inflation is still high. They can't immediately cut rates because they think if they did that, if they cut rates, then inflation will still be high and remain out of control. So they want to see more control over interest rates and inflation. And they want to make sure that when they do cut rates, inflation is already under control. So the target rate is for inflation to be at 2%. It's currently at 3%. So the US is going to be holding interest rates at the current levels at least until the second half of the year. Initially, people were thinking they were going to cut rates in May of this year, but that doesn't seem likely at this point, because we got high inflation numbers recently this week, and that's something that. Okay, I'm seeing comment from Ranjit. You don't think the platform is good for you. Why do you think that, Ranjit? Share with us. Is it because of a specific feature that you're looking for? Is it because of the results of your trading? The results of your trading is something that you can fix. If you lack specific features, maybe you are looking for specific features that is not on the platform. Sometimes you can still access these features on other tools, using other tools, but you can still trade on the platform. So some people do that. It's normal. We have, for example, on the platform, we have the news section, which is the calendar right here. There's a calendar feature right here. So it shows you upcoming news events as well as past news events, and then you can see which country is affected by it, because it's got the currency flag there. It's got the time and date. If you click it, you get more details from it. But some people, maybe they want a calendar where they can filter whether the news is high priority, low priority, or middle priority. And some sites do offer that. Forex Live is one example, Trading Economics is another example, and also FX Street. So traders can always go on to other websites and use those and make their analysis, and then come back to trade on the platform, which is fine. Whatever works for you. If you don't feel comfortable using this particular feature on the platform, you can use it from other websites, and then come back here to trade, because what's important is you being able to participate in the market, being able to take a position whether it's up or down based on your analysis, and that's going to be giving you the opportunities for profit. Some people prefer to use TradingView, for example, for analysis, because they can write so many things on it. It's perfectly fine. A lot of traders do trade on their brokers, but they do analysis on their own software, on their laptops, or even on the browser, like TradingView. It's fine, as long as you get to participate on the market and take positions in the direction that you think will be giving you profits. That's most important. There's no point analyzing and reading and researching but not being able to trade. That's the worst. So be sure to be there on the market. Be sure to have your trading balance ready and take a position when there is a good opportunity for you. And sometimes you need to practice. So you can practice also on the platform. We got a demo account feature. I have my demo account switched on right now, and you can test all your strategies right here. So if you think the market is always wrong, you can always test that. If you think the market is always right, you can also adjust and modify your strategy and test it on the demo account without losing real money. And when you have achieved certain consistency, when you're making 6 or 7 trades out of 10, winning trades out of 10, then you can move and switch your account from demo to live account, and that way you can have you can implement your trading strategy that's working on your live account, and hopefully you make money and enjoy yourself as a trader. I can tell you, I love trading. Understanding what's happening in the world is important. It's part of fundamental analysis. Trading charts alone is not enough. You can't use patterns, indicators, and technical analysis alone. You have to take into account context. You have to take into account fundamental analysis as well, to be able to make sense of what is going on and seeing whether the market is agreeing with you or not. The horizontal line, okay, yeah. Like I said, you can use it on the platform, or if you can't or do not have access to that feature, you can do the horizontal line on another site like TradingView. And then once you have figured out where your entry and exit points are, you can use the entry point to open an up trade or down trade, set the duration based on where you think the exit point needs to be, and then trade that way. I understand, not all platforms have all the features we need, but it's something that we will improve over time. Most importantly, you get to trade. Now, if you're happy to trade here, by all means, join the community and continue to trade, and join us in the live streams to discuss, because you improving yourself as a trader, doesn't matter what platform you use. You could be using a totally advanced platform, but if you don't improve yourself as a trader, don't continuously learn and look at yourself and look at your trading results, your assumptions, it's also not good. Okay, so I hope I hope that answer helps you. You can trade here and analyze on a different using a different tool like TradingView if you can't have those features in your account. Okay, so I guess that's the session I have for you today. Be sure to take advantage if you are intending to make a deposit and start trading, or just add money to your account. Be sure to take advantage of the promo we currently have running. The coupon or promotion code is all in the description below. Take advantage of it. You could double your deposit when you use the promo code. So with that, I will see you next time. Take care and enjoy your day's trading.